Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monty, and this is a one-year daily candle chart of the Invesco QQQ Trust, which is basically the ETF that tracks the tech sector, triple Qs. Now, if we zoom in here, you'll see that I left my lines on the chart from last week's report. And here we have another week where we hit all targets precisely. Most of those targets were hit on Wednesday. As you can see here, I drew this diagonal line known as a zip line. I drew that last Friday with the end line target ending right there at 285.12. So we hit that target on Wednesday. Then what happened is we began to form a pivot point to the upside. Now that the targets have hit, let me erase all these lines and redraw what I think we could see for next week. Now look right above here. You can see that there's still an open gap that needs to be filled. 80% of the time gaps do fill. And then again, after they fill, there's an 80% chance that prices will reverse. Now, I was toying with the idea of giving an upside and downside target over a 2-week period, but I decided to change that and go with the shorter term target up to a level that will be very close, if not all the way to fill that gap. So the Qs are going to be 296.96. And then we'll have to keep an eye on the volume down here because we already have 3 green candles in a row. And if the volume continues to drop as we get closer to that gap fill point, then the probability of a reversal point at resistance or a pivot point is increased right there as it approaches the resistance. So let me give you that target again is 296.96. Now, if we look at the DIA, which is the diamonds, that's the Dow Jones Industrial Average ETF, again, right there, hit that price target on Wednesday precisely at 307.13. Went a little bit further than that, then we pivoted up. It's pretty much the same story, except this is a gap up as the momentum indicator is being crossed. So the CCI is crossing over the zero line. That's the momentum line. And the rule of thumb for that is generally 2 to 4 more days to the upside after the momentum line is crossed. So I'm putting an upside target on the diamonds as well. Whether or not we fill that gap, we'll have to see, but I'm being conservative, looking at this high as a probable target for resistance as well. That upside target is 317.81, 317.81. So we could see another 500 points to the upside next week before the volume drops and we hit resistance. So that is the diamonds. If I go on to IWM, it's going to be very similar right across the board, folks. We hit all those downside targets, but this one we did not gap up. We see a green candle that closes over the 20-period moving average right there on higher volume. Look down below. The CCI has not yet crossed over that momentum line. So if it does that on Monday, again, we could see that rally last maybe into Wednesday before we see a drop or a pullback from resistance. Where would resistance be on IWM? Well, it's going to be right up to the highs right back here. See that high right there? We're going to see the highs being tested. Upside target of 178.62. I'm going to erase these now that the prices have hit those targets. And I'm going to even erase this upside gap until we get over this resistance. That is something we'll have to see, again, as a resistance point. So, again, upside target on IWM is 178.62. I wouldn't be going crazy putting my bullhorns on just yet because if we pull back from this resistance, I do believe that we're going to make another run to the downside to take out those lows. And then we get right back into our bear market. I'll explain why I think that's going to happen eventually. Anyway, so that's IWM. If I look at SPY, this is the S&P 500 ETF. You can see same thing. It's a repeat of everything that I've said, except we're looking at a different market. Downside target of 380.02 was hit. For those of you that listened to my report last week, I did not report on that on the video, but I pinned my target at 380 on the top of the comments page. So hopefully you all got that one. Now we gapped up. Look at the momentum line down below right here. See, we're crossing that zero line. Therefore, I think we're going to go up just a little bit more for the next couple of days. Test resistance at 389.98. and then we'll have to see what happens with the volume. Remember, we have another gap that's opened up here, but we'll have to see. Again, it has to be a breakout over this high on higher volume to fill that gap. So all eyes are going to be on resistance next week. And then ultimately, I think we'll take out that low over the next 2 to possibly 3 weeks. I think we could be right back down to those lows on the S&P. Now, for the most part, the VIX is inversely related to the S&P. So my target for the VIX last week was that we would go lower and then come up. The end of my target for the VIX was 27.13. We definitely hit that. And then after we hit it here, what happened? We pulled right back. Now, I'm not going to remove this line. This is my longer term VIX target that I've been keeping in place. That is 41.88, 41.88 on that. And I'm keeping that as a longer term target. But I will erase these lines now that we see the targets have been hit. Now, looking at this, you can see that there is a support level right here. Isn't that interesting? Well, I think we're going to break out below that. And I think we're going to go just a little bit lower on the VIX before it pivots back up. But I'm going to do a two-parter again. I think we're going to go a little bit lower on the VIX and then go right back up to test these highs. So downside target on the VIX, you might want to put that in your watch list as a leading indicator. Downside target, 22.88 on the VIX, and then ultimately a pivot right back up to 28.53. Our members are trading the VIX in options. We're doing different contracts, but if you're interested in learning how to trade the VIX using options, just go to Market Rebellion and plug into that team there. They'll help direct you to the place you want to go. Again, that's marketrebellion.com. And I have that link, by the way, in the description page below. Now, finally, I want to talk a little bit about what's happening around the world. Obviously, the government in Sri Lanka has fallen to the people. That was the first domino to go down. But I want you all to keep in mind of the geopolitical events that are taking place right before our eyes. Because the way I see it, it's the curtain basically is being pulled back and the truth is coming out. And the fact is, whether you're a Democrat, Republican, it doesn't matter. Liberal, conservative, does not matter at all. The people are rising up against the globalists and they're saying, no, enough is enough. We're not going to have you dictate our lives. And this is exactly what's happened in Sri Lanka. Now, if you go on, look what's happened. Boris Johnson resigns. Shortly thereafter, 50 of his MPs resign in a 48-hour period. So that's crumbling for Boris Johnson and that whole party. Look at what happened recently with Mario Draghi. Offers his resignation. We'll have to see whether or not they accept that. But again, people are pushing back. Pressure is on the Italian government, and it keeps going. Look what's happening to Macron. He's losing his base, and he's fragmenting his party. You see what's happening over and over again. Look what's happening in China. People are rising up against the Chinese government because the banks are holding back on their money. Keep going. I talked about this. The Dutch farmers are revolting and protesting against their government, and they're teaming up with other farmers. Look down below. We have Germany, Italy, Spain, Poland especially. It surprises me, but the Polish farmers are springing up as well. And again, we'll have to see how far these dominoes reach in these governments across Europe. And then what does that mean for Trudeau? What does that mean for Biden? We don't know. These are dominoes that lie ahead of us, but you can see there's a lot of talk about Biden's health, whether or not he's able to continue on. Forget about him running in another term. Whether or not he'll be able to finish out the rest of this year or even the rest of this term will have to be seen. But what does that mean for the markets, folks? Well, one thing about investors, they like stability. Investors like a locked government. They like when there's a balance, right? They don't like when there's uncertainty. They don't like when there's unrest. So when you look at the big picture, just looking at the Dow for a moment here, we're only 6 months into this bear market. Could we see a possible rally every now and then within the bear market? Of course we can. But the overall bear market is still in force. And so if you're trying to force a long position or a buy order in a bear market, you might be right. And then again, you might be wrong. You might be right for a short period of time and you have a winning trade. And then all of a sudden, what happens? The winning trade turns into a losing trade because you didn't take your profits. See, what we're doing is we're educating people on how to read the charts. Take the pressure off of yourself. Learn how to read a chart. learn how to manage risk, learn how to trade options, learn how to trade equities the proper way, and you'll be able to sleep at night. I mentioned this on a conference call just a little while ago. I think the people that are experiencing the most stress right now are those who are the buy and hold investors who are holding on and hoping that things will get back to a bull market. Well, that's not really a great strategy because hope is not a strategy. But if you have a plan and you know how to hedge a position, even if you're an investor, learn what a collar is. A collar, let's take just one stock for a second, right? Let's just take Tesla. I'm just throwing this one out there for you. Let's say that Tesla goes up and you're taking a long position and you want to collar the position. What does collaring mean? You learn how to sell calls at a particular strike price. If you don't know what I'm talking about with regard to strike price, take an option course. You sell a call, you collect money. What are you going to do with that money? You sell a call that obligates you to sell the stock that you already own at a higher price. You then take that money and you go buy insurance on that very same stock, which comes in the form of an insurance policy. And you're using the market's money to insure your position. It's not a very complicated strategy. It takes time, of course, to learn it, but it's not rocket science. Learn how to protect your positions and using the market's money to do so, and maybe you'll get a better night's sleep. That's basically what I'm saying there. Just learn how to use the market's money to protect you and learn how to read the charts. And then you could be able to relax with some of these positions. So that's it for this week. Have a great weekend, and we'll talk to you soon. So long.
Hello, John Najarian here. If you want to trade like a rebel, if you want to party like a rebel, well, you got to come to RebelCon 2022. It's going to be in Dallas, Texas, at the fabulous Four Seasons Resort. We start the 21st of September, go until September 24th. It will be more fun and more live trading than we've ever done before. That's why it's called RebelCon 2022. We're going to have barbecues and double the amount of live trading. So if you want to book that now, make sure you do, because the guest speakers, as soon as we announce those, this thing's going to be sold out. It's going to be something you do not want to miss. Limited to 250 people. Sign up now for RebelCon 2022 at the Four Seasons in Dallas, Texas.
Welcome to the rebellion.